there's a handful of things there. Stabilizing. I think the other thing that's going to be helpful is some good regulation in the US. We need it. And you're seeing regulation happen around the world. And so with some more time here, I think you'll see some good regulation come out in the US.
This is Henry Washington, and you're listening to the Average Joe Finances Podcast.
If you're watching this on YouTube, make sure you smash the like and subscribe buttons. If you're listening to our podcast, go leave us a 5-star review. All of our links can be found in the video description or show notes below. Hey, welcome back to the Average Joe Finances Podcast. I'm your host, Mike Cavaggioni, and today's guest is Eric McDonald. So Eric, thank you so much for joining me today.
Yeah, it's great to be here. I appreciate it.
Absolutely. I'm pretty excited to talk to you because I don't have many crypto guys come on the podcast, right? And it's something I don't know that much about, and I'm not comfortable talking too much about it because of my limited knowledge. To have you on to discuss some of these things, and I'm going to ask you some of the quote unquote dumb questions, but I'm excited to do this. But before we do that, I think it's fair for my audience to get to know you a little bit better. So if you could share a little bit about yourself, share your story. Who is Eric McDonald?
Yeah, I'll give you the corporate professional background side of Eric. And so I started a healthcare technology company about a year and a half out of college. And this was a company called DocuTap. And it's the original idea, which still exists today, is the idea of an electronic medical record that a physician can carry around the clinic in his hands. And this was 10 years before the iPad ever came out. So we were really early in our time. And over the course of 22 years, I wrote all the original source code, built a team, I raised money from angel investors, and then from a family office, and then venture capital, and then private equity. Really fun, cool startup story. Last year it sold for $1.25 billion. And so to be able to say, no, I didn't get all that money. Don't worry. The private equity guys and VC guys got a good chunk of that. But to be able to build something like that and say, hey, over the course of 22 years, here's what I did, is super fun. And that's probably what I'm most proud of, is the success I saw there. And most of that success, honestly, didn't come from me. It came from the people I surrounded myself with. And over time, I realized I do have this knack for taking something from nothing and building it into something great. And so I think I'm probably foolish enough to try it again. And this time it's not in healthcare tech. It is in tech. I think of it as more fintech. It's the crypto space.
Okay, awesome. Thank you for that. And what a background, right? From the first medical tech piece that you created to now, and congratulations on that success. To be able to sell that for over $1 billion is absolutely amazing. Now, yes, I know you got a small chunk of that, right? Because you had a lot of other private investors in there. That's how it works with real estate too. I invest as a limited partner in multifamily deals, and I get my small chunk based off of how much I put into it. So that's pretty neat. But yeah, so you have now evolved going towards cryptocurrencies, right? You have it. What's your company called now? It's CoinLion.
Yeah, CoinLion.
Okay. Can you explain a little bit what you guys offer and what you guys do?
Yeah, you bet. And there's a handful of things when I look back at my prior life. In my prior life, we built this great organization on one niche within healthcare. And so we focused on this niche that was like 0.25% of all healthcare in the United States. And so as I entered into CoinLion, I wasn't the founder, I wasn't any of the original crew. But as they brought me in, I said, guys, I know you want to be an exchange. Let's carve out a niche within that exchange and not try to cater to everybody. And what is it that let's make this just stupid simple so people can get on and feel safe about buying and trading and selling on this platform. And so number one, hey, how do we make this safe and just stupid simple? And then two is really this idea of auto trading using bots and algorithms. And we do both of those in a really simple way. And we really cater to two different audiences. One of our audience is that sophisticated trader who wants to build some strategies out and knows how to use technical indicators and when to buy and sell. And we've got some really robust tools for that individual. But we know that's probably a limited set. In fact, we think that's less than 5% of our target audience. And that's what it is today. So the other 95 are your average Joe, honestly, that, hey, I have no clue what I'm doing in crypto. I don't. But what I do want to do is I want to follow Eric McDonald, or I want to follow Mike. And so they get onto the platform, they create an account, and they follow and they subscribe to my strategies, or they subscribe to your strategies. And so they could put, hey, I'm going to put 30% of my assets to follow Mike and 70% to follow Betty. And when Betty's strategies trigger a buy or trigger a sell, so does the person that subscribed. And so ultimately, when you boil down, what do? That's what we do. We are an exchange, so you don't need an account somewhere else. All of the settlement happens on our platform. We keep all of the ratios at a 1-to-1, right? Meaning if you buy a Bitcoin, like we have the Bitcoin there. We're not leveraging anybody's assets. We're not borrowing assets. None of that kind of funny stuff that got FTX and Sam Bankman-Fried in trouble.
Yeah, I was going to say that's the big difference between you guys and FTX then.
Yeah.
Because you actually have those assets on hand, not leveraging someone else's to do that.
We are, and I'm going to rabbit trail a little bit. So I want to come back to, ultimately, those are the two things: safe and leveraging bots to do trading. So if you want to just buy crypto and hold it for 10 years, you can do that a million different places. But if you're like, hey, I'm looking for something super simple that capitalizes on the volatility, we're that place, and we're a safe place for people to do this. We're based out of the Midwest. We've got awesome work ethics. And when you look at my track record for building businesses, my goal is you just build an awesome business. It's got a really good foundation, and wealth creation will happen on its own. Okay. Different than what I think oftentimes people are trying to build on greed. And there's this land grab. I have to build something overnight. So again, I go back to my last company, sold for 1.25 billion. That's awesome. It was not built overnight. It didn't take 2 years. Nope, it took 22 years. And, the number of people that have come up to me after they read an article in the paper or read a journal, and they're like, wow, you guys just exploded overnight. I'm like, nope, we really didn't actually. It took a long time. And so that is one of the differences here, is we're not trying to be a flash in the pan. And just, again, another side story, that's where a lot of these tokens come into play. I was talking to a gentleman about 2 months ago, and he said, hey, my net worth last year was 800 million, and now it's 0. And I'm like, what? How does that kind of money disappear? He said, we created this token. And I said, Lion, we've got our own token as well. It's awesome. I want to hear your story. How did it and it went just through the roof, and he was worth 800 million. Okay. I'm like, and then it literally went to 0. And this all happened within 2 weeks. Okay, tell me, where was the value? There's no value. We just were trying to build stuff on hype and hope that everybody thought our token was the next token, and everybody just would want it. And for me, there have been a lot of crypto companies. That's what it's all about. There's literally no underlying value being created there. Here's a bunch of tokens.
I'm glad you bring that up, Eric, because I feel like that is the fear a lot of people have with crypto, including myself. Because that's a lot of what we see. We see a lot of these random token coins come out of nowhere, and some influencer will hype it up, and people just buy it, and it inflates like crazy. And then the people that made the coin and got in early, they sell and they make a nice profit. And the people that were buying towards the middle and the end get screwed at the end there. And I've been seeing so much of that. And I feel like that's one of the things that's been giving crypto a bad rap. So I'm glad you brought that up, because that's full transparency right there.
Yeah, I think there's a few things that have given crypto bad rap. Things like FTX, Sam Bankman-Fried.
Oh, 100, that's the number one thing that comes to mind,
right?
Yeah.
And honestly, in my opinion, that boils down to one thing, and it's greed. And greed, if you rewind 50 years, you're going to see a crash from somebody else driven by greed. 100 years ago, like just for thousands of years, humanity has been driven by greed. And so like, I want to be able to build a legacy that I can honestly be like, hey, this is what we built and we did. And so greed has been a huge factor. I think the other one is trying to make things happen overnight. And that's, I do a live event with any of our users once a month. And I've hammered this home every time, is that my goal is to build value in this business, build a sustainable business that has revenue and has all of the pillars needed for a business to grow and flourish. So don't expect this value, the value of our token, to go from 5 cents, 7 cents, up to $1, up to $30, all in a very short period of time. It's just, I don't think that's realistic. And so I have been building all of these pillars for success at CoinLion. And with time, I'm going to start building more and more value into the Lion token. But I'd rather start with that core business instead of just that Lion token. And so you're going to start to see that come to fruition more and more over the next 9 to 12 months. And that's where a lot of tokens have gone wrong, is there's no value that's behind and driving that token value.
Yeah, no, that's a great point. You brought that up at the earlier as well with the one person that you had described, that their coin went, they got an $800 million net worth like overnight, and then the next week it was down to zero. Yeah. Value, that's one of the most important words in any space, any investment space, is value. What kind of value are you bringing to the table with this specific coin, or what kind of value bringing with the asset that you have? Because the value, that's what's going to cause people to want to buy it.
Yeah.
There is some intrinsic value to it, right? Now, there's been a lot going on in the crypto space lately, right? We saw after FTX, we saw Bitcoin drop again, and all of a sudden it got a little quiet, right? After all that stuff went down. So why is it now that with this uncertainty, you're starting to see more people or more investors start picking up the pace in the crypto side?
So there's a lot of speculation on what's driving this, right? You've seen a really nice rally since, I'll call it January 1st of this year. So what's driving that? Part of this is like, you've seen over the last 18 months, 15 months, a lot of collateral damage from just some failed projects. So you had the Terra Luna collapse, and there was just a bunch of fallout. And every time there was some collateral damage there, everything would pull back another 10 points. Sometimes it was 30 points, right? And then it'd start to climb back a little bit, and then there's something else. And then you've just got the economy in general, that the economy has, in the US here, has really struggled. You're seeing the Russian-Ukraine war, like all of these things, these macroeconomics, they totally have an impact on crypto. There's a higher correlation now to Wall Street and crypto than ever before. And that can't be surprising. We can't sit here as crypto people and say, listen, we really want this underlying blockchain to be the financial underpinnings of the world. Okay, we can't make those statements and then also be like, hey, when things in the world happen, why does crypto go down? When you want it to be part of it, don't be surprised when it pulls back with that. And so I am not surprised to see pullbacks in the crypto space when the macroeconomics of the world are having some of the same hardships, okay? A tighter correlation to Wall Street. And when I say Wall Street, also is tied into all of the economics around the world as well. And that was part, in my opinion, of what we saw happen through most of last year in 22 and early in 21, or sorry, late 21. All right, so why the rally now? I think we are starting to turn a corner on a few things from a macroeconomics perspective. I think at some point you have to see a bottom, and I think that we've seen that bottom. And so to be able to see this nice rally is giving the confidence that, yep, this is definitely here to stay. We know it is here to stay, and here's this rally. For me personally, the other thing that comes into account right now is what's going on with the US dollar. There's a lot of talk about around the world, other countries just saying, hey, listen, we're going to shift gears and not use the US dollar for trade with X. Biggest one, obviously, is oil being the reserve currency there. That's a big topic, okay? So when there's a gap in anything in our lives, it gets filled by something else. And I'm curious to see how crypto starts to fill some of those gaps. And I think it's an exciting time for crypto. I think that we're still going to have a little bit of a hard slog here. I think that 23 is ultimately going to end the year in a strong spot. I do think that there's just going to be another one or two dead bodies that float to the surface that's collateral from prior projects or somebody else that over leveraged themselves. And so when we see these things, we can't be surprised with some of these bank failures where they didn't manage their funds well, or an exchange like FTX where they were greedy and like over leveraged stuff, hid stuff, didn't do what they said they were going to do. Some of those aren't surprising. Those are going to get weeded out though. And there's a chance one or two bubble up yet this year.
Yeah,
Sorry,
absolutely.
I threw a lot at you.
That's great. So I want to go back to what's happening with the dollar right now as well, right? Because that is a very significant conversation that there's multiple countries right now talking about coming off the dollar standard, right? As a reserve for trade. And even with that happening, the US government is now talking about going live with their dollar crypto. Have you seen anything about that or heard anything about there's going to be a digital currency coming out that's supposed to be match the US dollar? And what are your thoughts on that?
Yeah, so a central bank digital currency, CBDC, is an item that people are talking about, okay? And I know that the federal government has kicked off a couple of at least one CBDC project, okay? I haven't found a ton of information on that specifically, okay? And it's a highly debated one. Now, you have heard a lot of talk about FedNow. FedNow is often confused as a central bank digital currency. It is not. It's just a new service that the Federal Reserve is introducing, okay? So today, the Federal Reserve has two services that we all commonly use. It's called Fed ACH. We just call it an ACH, okay? But they do ACH transfers all the time. They all flow through the Federal Reserve. Like that happens today. We've all gotten used to it. We all use it. The other one is Fed Wire. And we just say, hey, I got to just do a wire transfer. What is it using? It's using the infrastructure, the servers, and the protocols used by the Federal Reserve. Okay, what are the downfalls of those? ACH transfers take anywhere from 1 to 3 days. They used to be 2 to 5. What time did you initiate it at? Was at 4? Well, sorry, it doesn't pick it up till the next day. Oh, the next day is actually Saturday and Sunday. Servers, the Federal Reserve servers aren't allowed to run on the weekends. Oh, it's a holiday too. The Federal Reserve servers don't run on the weekend or holidays. All of these things. And so with time, the federal government's crud, we have to have something better than what we have. Let's take the exact same infrastructure we have and create FedNow. What's FedNow? It's just that. It's the services that we just described, instantaneous. Wait, we can actually do that on the weekends then too? Yes, it does. Okay, so it's instantaneous and it's 24 hours a day, 7 days a week, 365. Yes. Oh, so it's a CBDC. No, it's not. It's not a central bank digital currency. It sounds like it. Okay, if you want to call it that, you certainly can, but it doesn't run on the blockchain. Okay. Oh, okay, good point. But they know what banks it's coming from. That's true, but they know that today from ACH. They know that today with wire transfer. So are we really going to get all freaked out about FedNow? No. Okay. So I think there's a great spot for this FedNow. I think we need it. Okay. And so I'm excited about it. And just for a little bit of context, there are times where as we're moving assets, we'll move 200 Ethereum, we'll move 50 Bitcoin, we'll buy and sell constantly. I need to move US dollars at some of the same rate. This morning, I moved 200 Ethereum and I moved that literally within 30 seconds, 60 seconds. It's so fast. Okay, great. I need to cover that with $350,000 in USD. I got to wire it, I call the bank, get a wire going. It takes 20 minutes, not the end of the world if it's during business hours, right? There are times where I need to do 2 or 3 of those in a day. Sometimes it's on the weekends and you're just waiting. So there's absolutely a spot for that. Now, central bank digital currencies, CBDCs, is there concern? Sure. If we're talking about the Chinese digital yuan that runs on the blockchain, yeah, we probably shouldn't be using that for all of our daily activities. I'm not going to go get groceries with that thing. I'm not going to be buying it with my house. I'm not going to be. So yeah, we should have some concern there. What about the US government? Or maybe tiptoeing out of the area you want to go. Do I really want the US government tracking every payment I do with a CBDC? Probably not. But here's the scoop. There are so many different stable tokens I can use. Like nobody's forcing you at this point that the only currency you can ever use anywhere in the world has to be the US CBDC. Let me pause. Let me let you respond or redirect you. Is that what you were asking?
Yeah. So I'm curious though, too, with going back to Fed now, right?
Yeah.
Do you think that having this instantaneous way to transfer US dollars will take away some of the convenience or some of the qualities that people use cryptocurrency for because of the fact that on crypto on the blockchain, it's basically instantaneously, right? So, like you said, you're able to move 200 Ethereum within 30 seconds. But when you have to wire the money, right? Oh, it's after 4 o'clock. Sorry, you got to do it tomorrow, right? Do you feel like that might cause a ripple in the crypto market?
Sure. So if I'm a hardcore crypto person, like all of a sudden I'm like, oh shoot, dang it. Now all of a sudden the US government has a quote competing product in that it competes on that one level. There are different aspects of crypto that doesn't solve though, right? In the sense that crypto is this distributed model. It's not going through any one central component. There's a level of anonymity that can happen with crypto and the blockchain that people appreciate. And that anonymity is decreasing though with time. If you wanted to hide your crypto, you certainly could. But there are a lot of really good analytics tools that can chase and track down stolen Bitcoin or stolen crypto in general. So the anonymity is starting to disappear a little bit, even regardless of any regulatory stuff.
Right. Okay. Yeah. So I guess in that aspect, it's not really going to affect it that much, but it's a competing product. So there will be competition, obviously. But with that being said, it's 2023, right? As we're
Yeah.
recording this, it's April, right? And there's a lot of changes happening right now, both in the economy, in the crypto markets, with blockchain itself. Where do you see cryptocurrency for the rest of this year and even beyond that? Like, where do you see this going?
Yeah. No, really good question. What I think that you've seen happen in the last few years is I'll say the infrastructure being built out. Think of this as maybe like your interstate freeway system, right? That's connecting. So you've got this really good foundational system now that didn't exist 3 years ago. Okay. And so I think that the next phase is going to be more of a consumerization aspect. Okay. Making it really easy for users to get on and off platforms and doing it in a way that complies with regulation. On our platform, we are verifying your identity and making sure that you're a legit person. We do a selfie and we match that to your government issued ID, verifying you are who you are, right? So those things have gotten better, but those are the infrastructure things that crypto needed to have and it needed to mature. So then you move into this consumerization aspect. And I think that's what you're going to see, I'll just say in the next 2 to 3 years is more of that consumerization. How easy is it to get my US dollars in here and then out of there? How easy can I move that? Where can I actually buy stuff? If I want to be able to buy stuff, how do I start using crypto to do that? I think you're going to start seeing some more of that happening in I'm just going to say the next 2 to 3 years. It's that consumerization aspect.
Okay. Yeah, right on. Because you don't see too many places where you can actually use crypto right now to make purchases. It does happen, but it's not happening a
Yeah.
lot. Like I know recently they had the first home sale in the United States that was bought completely with Bitcoin, which was really cool. And I definitely see the benefit of blockchain, especially when it comes to even real estate, right? Having a title as an NFT or something like that is significant, right? Because nobody can mess with that. It's on the blockchain, you own it. You own the title, it's yours. It cuts out the middleman, right? So I'm a little worried for the future of title companies, right? As this becomes more and more used, or maybe they'll just change how they do business and now they'll be the ones structuring how that works or building the NFT for the title.
Yeah, you hit on title companies. Like there's a handful of companies that like they have to evolve with time or they will get left behind. Like Blockbuster and Hollywood Video, 2 great examples. I haven't seen one for a while.
Yeah, that's true.
They didn't evolve, and that's natural. You look at some of the hype in social media. Instagram and Facebook used to be the hot thing, and they're getting left behind. They're getting their lunch eaten by TikTok. And so to think that you can stay the same for decades and own the market is just, it's false. And so there will be times where title companies, that business better change. It's going to change. And blockchain is a really good place for that to excel. And so I think, going back to your question, I think that you're going to see more and more of that happen in a tangible way over the next few years. And so I think 23 is going to be a year of stabilization and validation of the market moving in the right direction, where everybody's like, yep, see? And now we're going to get after a bunch of the consumerization aspects.
Yeah, so bring it back down to its normalcy, get comfortable, and then we're going to start to see some big changes coming, right?
I think so, yeah. And Bitcoin just went through the roof. It grew way too fast, in my opinion. So is it surprising to see a big correction? No, it's not surprising. And then you have a bunch of fallouts that cause it to be worse, right? So there's a handful of things there. Stabilizing. I think the other thing that's going to be helpful is some good regulation in the US. We need it. And you're seeing regulation happen around the world. And so with some more time here, I think you'll see some good regulation come out in the US.
I knew I liked you, Eric, because you're the first crypto person I heard actually calling for regulation, that because it needs to be regulated. There can't be, and I'm not a fan of government involvement in pretty much anything, but when it comes to protecting people, I'm for regulations when it comes to protecting people's livelihoods, their lives themselves, their wealth. I think stuff like that's important. And to have an unhinged crypto market with nobody tell you what to do, it makes it dangerous for a new investor, right? So speaking of a new investor, let's say somebody's just now wanting to get into crypto and they want to start buying and trading, and they don't know too much about it. What's a great resource they could use to learn more about crypto and blockchain and just get their bearings before they deep dive into this monster?
Yeah, it's a little bit tough because there's so much on the web. There's just so much.
I know. I'm trying to have you narrow it down for me, man.
I'll narrow it down to this. Go to YouTube and type in blockchain. Teach me about blockchain. It is tough because there's so many different aspects of crypto, and the underlying one is blockchain itself, right? Go understand what the blockchain is. And if it's helpful, I can provide you a few links that are really good links on blockchain specifically, give you one on Bitcoin specifically and Ethereum. Okay. So if anybody's going to go educate themselves, focus on those three topics. What is the blockchain? 2 is, what is Bitcoin and how is it different than the other tokens, the blockchains, right? And 3 is, what is Ethereum? If you learn about 2 tokens, Bitcoin and Ethereum are the 2 you want to learn. Okay. And that's the other thing we do, Mike, is we don't spend a bunch of time pulling in junk tokens onto our platform. So we have people all the time, we're like, hey, I just found this like really cool token called Wormhole. Do you have it? I'm like, no, we don't. We have the ones that I know are going to be as best as possible, stable and reliable and a good option. But they're also not the ones that are going to do a 10,000% return in 1 week or something like that.
Yeah, that's the stuff that's unstable. That's going to make 1 or 2 people rich and the rest of the people get screwed over.
Yeah, they get a goose egg. Yep.
Yeah, no, that's awesome. That's awesome. Okay, so now you, Eric, you've had some great success, right? Building up the medical tech company, and now you're with CoinLion, you're helping them build up. There's also a couple other businesses that you sit on boards for, right? What are some of those?
Yeah, there's a mixed bag there. One of those is just a good buddy of mine. He runs a company called Sidecar, and they provide services to chiropractors. And so because of my background in healthcare tech, there's a bunch of value that I can provide to him. Phrase is an AI healthcare engine, and it's trying to figure out how to leverage voice capabilities with AI in the healthcare space. And so there's a few really fun projects there. Yeah.
Awesome. Yeah, I was just trying to, so people could know a little bit more about your background, that you're not just the crypto guy. There's so much more to it on the tech side as well.
Yeah, I swore I'd never do a startup again, because startups are just hard. They're hard. And in reality, that's what I'm good at. And I kind of wish that I wasn't some days, but it's my niche. And so go check out my profile on LinkedIn. You can see a few of the other companies that I'm affiliated with. I'm not looking to jump on a bunch of other boards. If anybody wants to reach out though, and I'll donate a little bit of my time, I can do.
Yeah, no, that's fair. Definitely appreciate that. All right, Eric, this has been very informative. Probably my favorite crypto interview that I've done. I want to say
Love it.
thank you for that. But now I'd like to transition this into something that I call the final round. And that's where I'm going to ask you the same 4 questions that I ask everybody that comes on this show. And it's going to give us a good idea of how you are when you get asked tougher questions. But I'm pretty sure I already know how this is you're going to crush it. So, you ready to go?
Let's do it. Let's go.
All right. So this is a personal question for you, Eric, but what's the biggest mistake you've ever made in investing?
In investing or in my professional background?
In investing yourself.
Yeah, it's probably not doing enough due diligence. So I lost $250,000 on a deal, and it was in a solar space. And ran through all the things, talked about the sources and uses, how you're going to use this money, right? Gave them the money, and a month later, they asked me to sit on the board, and we were running through all the financials, and I'm like, hey, where's the money that I just gave you guys? And the response is, we ended up having to go pay down some debt. I'm like, wait a second. That was not part of the conversation at any level here. And in hindsight, I didn't do enough due diligence to realize that they were being pressured to pay down specific debt covenants that they had. And then they weren't in a spot to actually extend that at all as well. And so I essentially gave $250,000 and it disappeared instantly with zero value.
Wow. Yeah.
So there's that.
They were already upside down. Ouch. I appreciate your transparency on that, man. That's tough. Okay, so the next question, Eric, is going to all kind of tie into each other, but obviously that was a big lesson learned for you, right? But what is something that you've learned that you wish you knew when you first got started? And this could be in the tech space or investing yourself, anything like that, for you professionally.
Yeah, earlier on, I should have sought out and sought for wisdom. Surround yourself with individuals that are going to help make you wise with time. And I did that. I could have done that sooner. And I think that with wisdom comes this, hey, check your ego at the door. And I think that when you're in your 20s, you think you can conquer the world. And so I didn't get bit by it, but in hindsight, a bit bad, I should say. But in hindsight, I should have sought out wisdom more, and I should have done it faster by surrounding myself with better people. Not that I didn't have good people, specifically on wisdom.
No, I definitely appreciate that, because that's one of the things I talk about a lot too. Jim Rohn says you are the average of the 5 people you surround yourself with. And that is so true, because, who you hang around with is who you project yourself to be. So if you're hanging out with 5 millionaires, you're going to be the 6th one. If you're hanging out with 5 people that are not doing anything with themselves and they just game all day and stuff like that, you're probably just going to game all day and not do anything with yourself. Yeah, that's super important. Seek out those connections that have the wisdom and the people that you want to be like, right?
Yeah. Yep.
Awesome. Okay. Eric, do you have any tips or tricks that you would recommend to someone that is just getting started out today? We talked about this a little bit earlier, but we can go into a little bit more detail here.
Yeah, I don't think anything I'm going to share is going to be new. It's probably things that are like, oh yeah, that makes sense, but it's focused. Case, don't try to boil the ocean. Go find a niche. I'm a big niche guy, right? And so if you're trying to get into healthcare, like what part of healthcare? Like if you're trying to get into crypto, narrow this down to an area that you can really go conquer and be great at that, and then expand from there. So often I think that people are probably they think too big, too broad, and they're like, hey, I'm going to reinvent salt water. And you're like, all right, can we maybe like dial this in just a little bit? So find a niche and just stay focused. The other thing that I do today is I don't work 80, 90 hours anymore. And it's not because I'm in a spot financially where I don't have to. It's that I think that you're going to get the same space by just being really focused with your time in the 30 hours you're going to work versus the 80 hours.
Yeah, absolutely. Be intentional with your time.
Yeah. I never worked an 80-hour week. And at the end of the week, I was like, oh, done with all my work, like literally everything. There's always more work to get done. And so when you work 30 hours a week or 40, and you're super intentional, right? That's the word you use, super intentional with it. I think you can get to the same space and save your family, save your friends, save whatever that is.
Yeah, absolutely. Appreciate that. All right. Eric, this last question does not tie in like the rest of them. It's just an opinion-based question, but it's, do you have a favorite business or investing related book or podcast or both? Or we'll even say crypto as well.
Oh, I'm probably horrible at this. I am a horrible reader. Like one of my good friends, he's the average CEO reads 50 books a year. I'm like, I read one or two, like at best, and they're audiobooks. And on the podcast side, I love listening to Joe Rogan, and it's probably more for comedy and learning than anything else. He's got such a wide variety of people that come on there. But if you're looking for books, I'm the worst at that. The flip side of that is anybody who is an aspiring entrepreneur or an awesome entrepreneur and you feel like you're failing because you're not reading books, no, you don't have to. Figure out how you're going to learn though. I learned by having really good mentors wrapped around me. And when I brought in my venture capital and private equity guys, they were like top tier, top 10 VC or private equity in the world. Those were my mentors. And so those are the guys and gals that taught me.
Awesome. Appreciate that. And it's okay. I don't read too many books either, but the ones I do, usually it's what gets recommended to me from people I bring on the podcast.
Yeah.
I don't enjoy reading, but sometimes I get a lot of value out of it. Like I just finished Traction, and that was such a good book.
Sure.
But anyway, okay. That is it, Eric, for the final round. You survived. Pat yourself on the back. Great job. Now, I do have one more question for you, though. And this is the most important one of all, because people are listening to this episode and saying, hey, this might be something I might want to consider or get into. If people want to learn more about you, they want to learn more about CoinLion, where can people find that information? Do you have a website you could share with us? Any social media profiles we can follow? Let us in on the deets.
Yeah, if you go to CoinLion.com, you're going to find everything there. So you'll have links to all of our social related stuff. So you can see what's going on Twitter. So go to CoinLion.com. You can sign up for an account. You're going to need government issued ID, no criminal background in the financial space. Otherwise, you're not going to get an account. But get an account created, go poke around. You don't have to deposit any funds yet. You can deposit some funds using ACH, which takes 2 to 3 days. We had FedNow, be instantaneous, but go deposit some funds. You can tiptoe into this a little bit, but CoinLion.com is where you want to get started.
Awesome. Okay. Definitely appreciate that. I'll make sure we have those links in the show notes to make it easy for everybody to copy and paste or click away. Just don't do it if you're driving. Eric, this has been an absolute pleasure. I feel like I learned a bunch, and I feel maybe a little bit more optimistic about crypto now that I know that there's people like you out there. So I want to say again, thank you so much. And I really appreciate your transparency with everything.
Absolutely. Thanks for having me, Mike.
Absolutely. Congratulations on your success and your continued success. And I hope to see more of that coming for you. I also want to say thank you to my listeners, and thank you all for joining me and our special guest, Eric McDonald, on the Average Joe Finances podcast. Go leave us a 5-star review and tell us what you liked about today's episode with Eric. Aloha from Hawaii, and have a great rest of your day. Thank you for making it to the end of this episode. Greatly appreciate you being here with me today on the Average Joe Finances podcast. If you haven't done so yet, make this the episode that you go leave us a 5-star rating or subscribe to our YouTube channel. The Average Joe Finances podcast is for informational and entertainment purposes only. Have an outstanding day.